Let's go ahead and make sure that the stream is going well. 1 2 3 1 2 3 check. Let's make sure that you can see me. There we go, we're all good to go. So what's going on, everyone? My name is Oleg, and today we're going to go ahead and find out what we can trade over the next couple of days, and we'll see what kind of stocks are undervalued right now. If you're watching the stream and repeat, so if you're not watching it live, just go ahead and leave a comment with the stocks that you're interested in the comment section below, and we're going to go ahead and review it next Sunday at 7 p.m. Eastern time. Don't forget to smash that like button below, subscribe for more, and obviously, hopefully you'll be able to find some value in this video. So let's go ahead and start searching for some of the stocks that we were able to find over the past couple of weeks. And before we actually find more stocks, let's go ahead and follow up on the ones that we've already talked about over the past couple of weeks again. One of our first stocks that we identified was the MFA. And MFA was able to break through the line of resistance, multiple week line of resistance, still currently trading above 180-day SMA line, still trading above 100 and, I apologize, for the 20-day and 180-day SMA line. Let's go ahead and zoom in on it real quick. So we can see that it reported positive earnings, so it had 19 cents, 17 cents, and just 8 cents. So this sent the shares up above the resistance line, but it brought it back down just under the previous resistance. So the way I would trade this one is I would definitely want to wait for the confirmation a little bit more for the stock to start making higher highs. I do like that it started making higher highs, it just hasn't broken through the resistance and confirmed it as a support. So for those reasons, I would just go ahead and wait until this line, the 180-day SMA line, and this line of resistance is confirmed as a support before we start investing into this one even more than we have right now. So again, I have 370 shares of this stock, and we're currently up $716, which I believe is about 93% from what I've invested into it. All right, and average price $1. Oh, okay, so it's actually probably, yeah, so it's over 100%. So the average price at which I bought 370 shares was at $1.96. So let's go ahead and look at NYMT. Yeah, so NYMT is the next one. Okay, so the first time when we called it out, it broke through the, I believe it was a couple of days ago, it broke through, it started making higher highs, and it's currently continuing to make higher highs. It's breaking above 180-day SMA line, which is awesome. So again, we averaged out at 2.28 on the share, so $2.28 per share. We only have 100 shares. We're up just over $184 in this position. Let's go ahead and zoom out a little bit. Look at a 1-year chart. Okay, so this is beautiful. So it continues to make higher highs. Again, it's trading above 180 and the 20-day SMA line. We have our RSI indicator that is, again, making higher highs, but slightly approaching the overbought side, so I would be careful trading this one. I would want to see a little bit more confirmation of a support before I continue buying into the stock. I do like the fact that MACD indicator is continuously consolidating here, and hopefully is going to be pointing up here soon. But again, all of the indicators, including RSI indicator and 2 SMA lines that we're basing our decision off of, are pointing up, which is great. So again, if you have any ideas for any of the stocks that you want me to break down, just go ahead and leave a comment and I'll read it here, and we can break those down and see if it's an overbought, oversold position, and what kind of play would that be a reasonable thing to do with it. All right, so let's look at some other ones. So we have GoPro. We have a GoPro that we looked at a while ago, and GoPro ended up tanking when it reported their earnings. So they reported positive 39 cents on the dollar, but ended up tanking the price just because people most likely bought on the rumors and sold in the news. Again, this happens fairly often, but the company started making lower lows, and what I would want to do before I take a position in this one is I would want the company to confirm this line of a resistance, like prior resistance, as a support, and use that as a guide to determine how we're going to trade this one. Let's go ahead and zoom out real quick. I definitely want to see what, nope, not this one. This is for day trading. Let's look at a 180-day chart. Okay, so so we ended up breaking below this trend line, which kept making higher highs. And before buying this long term, I would definitely want to see more consolidation here. I would want to see higher highs. And again, I don't really like the fact that it has a line of resistance of 180-day SMA line right around $8.69. Let's go ahead and check this one. It's about 10% higher. Okay. So 10% higher is not too bad, so it still has a profit of margin of 10%. But again, is that the best deal that we can possibly get on the specific stock, or would we want to wait for the confirmation? I would say I would want to wait for more confirmation of higher highs. I would want to set up my alerts and make sure that we follow up on this one during our next stream. Let's go ahead and zoom out on this one. So the 1 year chart. Okay, so it's approaching a very, very interesting line, I guess I should say. So it's trading below 180-day SMA line, and it seems like the 20-day SMA line is pointing down. Both of the indicators, RSI and MACD indicator, are pointing down. So that means that RSI indicator is not on the overbought side, which is good. It's kind of hovering around the middle. What I would want to do on this one is I would want to see this line being confirmed as a line of support. Based on the previous history, it continues making higher highs and confirms it as a support. So I would definitely want to see that being confirmed as a support prior to taking a position on the stock. So next month on the 30th, they would be reporting their earnings. So we still have about a month. So 30 days. All right, let's go ahead and check out the CIM. All right, so if I remember correctly, this one is a real estate investment trust fund, so REIT. We're going to go ahead and go to Yahoo Finance actually to do this one. All right, so I want us to check out the interest rates that, or the dividends that they pay. CIM, let's go ahead and do that. CIM. And this company pays, so 10.40% in dividends. This is a very, very, very difficult to beat. It's so beneficial. It seems to be overvalued right now, midterm and long term. It continues to go up. But again, one of the things that I love to find, I guess, to look for in these kinds of companies would be to find the valuation and see whether they're overpriced or undervalued right now. So the company ended up losing about 70% of its value, and ever since then they were able to recover 79, almost 80% of their value. So it's currently trading at $11, but prior to the Rona situation, it was trading at $21 a share. So we still have about 40% profit margin up until, well, actually we have a lot more if we are counting from the bottom, but it's 82% up, upward momentum. And again, this is a very interesting situation because a lot of real estate investment trust funds are not doing really well right now because of the low interest rates. But again, on the opposite side, we can see that the yield, actually, we'll check out the yield curve here in a minute, but the government bonds, they started yielding a little bit more on the 10-year Treasury government bonds. Let's go ahead and check out the yield curve. And so, oops, I apologize for that. All right, so we have a 10-year Treasury. Okay, so February 1st, let's see, February 26th, it ended up going up. Okay, so yeah, it's starting to go up. That's why we ended up seeing the drop on the stock market over the past couple of days on Thursday and Friday of last week. And let's go ahead and check out the 10-year chart. Okay, so very, very interesting. Okay, so it's continuing to go up. So 10-year Treasury constant maturity, 2 years. Okay, so 10 to, okay, so this is this yield curve is a very, very interesting chart. So it's still ticking up, just like during the previous recession, right? So in 2008 all the way up until 2009 and continue to go up. So this usually signifies a recession. So we got to be very, very careful at the time like this, just right now, to when we are finding the stocks that we want to invest into. We definitely want to consider the 10-year Treasury constant maturity minus the 2-year Treasury. So basically the yield curve. We definitely want to consider the inflation rate that the Federal Reserve is expecting over the next couple of years. And unemployment rates, those are kind of skewed, so those are kind of difficult to use as a measurement factor. They're usually pretty accurate, but after a couple of years of it being released, not just exactly at the right time. So yeah, we got to be very, very careful with this. We're going to continue to monitor this, but it's definitely pointing up and it's continuously going up. So still signifies a recession, doesn't really show us the signs of a recovery. So we definitely need to spend some more time figuring out which kind of companies, what kind of stocks we want to invest into. So again, we have CIM that we identified during our last stream. So 10.4% in dividends. Again, the company is still way undervalued in comparison to where it was trading at over the past 5 years. So at around $18 a share. And if we look at their max chart, again, even if we go back to 2014 or 2010, the company used to trade at about $20. Back in 2012, it did go down all the way to $12.70 a share, but it continued to go up all the way up until 2014. So for 2 years, it ended up gaining about $6 on the per share, then went down to 13 and went up all the way to 20. And then this was one of the main drops, right, that it's recovering from right now. We saw a lot of volatility at this rate level right here, so we got to be very, very careful with how we are trading this one. So CIM is a good one, and we identified this, and we ended up marking that on our chart. So again, if you have any ideas for any other companies that you want me to break down, just go ahead and share those in the comments, and we're going to go over those as well. And all right, so this one is continuously going down. I see that it's approaching a very strong trend line of resistance, and I would not want to be on the middle of that. So we looked into TWO last time. So this is another real estate investment trust fund. So almost 10%, so 9.65% in dividends every year. The stock used to be valued at about $15 a share, then dropped all the way down to almost $5. So actually $3.81 a share, and currently trading at $7.22 a share right now. So continuously making higher highs, and I'm pretty sure I'm investing into this one just on a different account. Let's go ahead and look at a different chart of TWO. All right, yeah, so we identified a very strong line of resistance that the stock ended up actually breaking through. That's perfect. It seems like it's pointing down just a little bit, but all I would want to see is continuously making higher highs. And again, if this is being confirmed as a support, I'm going to definitely continue taking a position on this stock. Again, don't trade based on somebody else's decisions. Make sure to do your own due diligence. I'm not a financial advisor, so just go ahead and take what you can from this, learn, but definitely apply it at your own risk, and understand that there are risks involved with obviously buying and selling and trading stocks overall. So making higher highs, let's go ahead and look at a 1-year chart again. What I would want to do is I would want to set up my alerts for higher highs. Let's go ahead and do that real quick. So stock at or above, and I would definitely want to see and be notified if it gets closer to this line of support. So again, line of resistance prior to that. What I would want to do is I would also want to set up another alert that is way below that, below the next, I guess, line of support, I should say. So at or below, and create. Perfect. All right, so they reported their earnings. There's nothing to really wait for us to act as a catalyst that is on the calendar here in Thinkorswim. So we're just going to have to monitor the news and make sure that we're staying connected with everything that is happening. Again, if you do have any other ideas for any other stocks that you want me to break down, then just go ahead and share those in the comment section below. And in the meantime, we're going to go ahead and continue searching for some other ones. All right, so where's our suggested ones? Usually there's a suggested list on the right side. Not here right now. There we go. So TWIVR. Let's look at this one. All right, so IVR. Yes, this is definitely another one that we talked about. Let's see if it's on our list. IVR, IDT. We should definitely add it to our list. IVR. And we should definitely look at the VOO, which is the index fund of S&P 500. But IVR, let's look into this one first. Okay, so IVR, I've experienced a lot of volatility on it this week, and I know this doesn't look like a lot, but this is a lot of momentum and a lot of movement for this stock. So we're going to go ahead and take a closer look here in a second. But again, the stock ended up trading at all the way at $18 a share, lost about 83% of its value, and it was hovering around $3 or $4 a share. So right now it's trading at $3.89 a share. If we're going to go ahead and zoom in on it, we can see that it continues to make higher highs. It seems to be following this trend line as its support, and it just recently reported their earnings. That's why we saw just a little bit of volatility in here. But again, as long as it continues to make higher highs, then I would definitely be interested in buying some more of this one. But definitely a very it's a low cap stock, so we would have to be very, very careful with volatility on this one. IVR, and it pays 8.33% in dividends. And again, for those of us who are just tuning in, we're just reviewing some of the stocks that I see the most value in. And the interesting thing with the REITs is that they can pay very high dividends in comparison to some other stocks out there. So just the fact that this is a growth stock overall, potential for growth, it shows a lot of potential for growth. Therefore, it's a growth stock. We just need to determine whether it's going to be on a short, long, or medium term. For me, this is a long-term growth stock. As long as the interest rates continue to stay down, we can still see a lot of improvement in the price of the real estate investment trust funds, as long as the treasury bonds will yield more on the 10-year and a 30-year treasury bonds. So in this case, again, we have IVR, we have TWO, MITT, and NYMT, which are all real estate investment trust funds that pay closer to 8 to 10% in dividends every year, which is really, really good. And again, trading at such a low valuations that are 80% below the previous price that it used to trade at for the past 5 years or almost a decade. I think this is a very very good opportunity to buy into those. But again, this is just me, and you don't have to follow my suggestion. I would not suggest you to follow my suggestion. This is just something that I'm doing. But again, if you have any ideas for something that you want me to break down, don't hesitate to share those. And in the meantime, we'll go ahead and continue looking for better ones too. IRR. Wow, this one has continuously been going down. This is a very difficult one to justify as a good buy. Let's see, I don't think I've ever looked into this one before. Alright, so again, not a very good, very volatile, has been dropping ever since 2003. This one also seems to have a lot of volatility, but ever since 2011 it continued to make lower lows. Not very interested in a stock like this one. Let's go ahead and look into some other ones. ARR. Oh, we've already looked into this one before. AGNC. This one has already recovered almost all of the money that it lost, almost all valuation that it lost. All right, let's look into one more, and let's go ahead and move on to something different. Actually, one more. Yeah, we already looked into this one. All right, sounds good. Let's go ahead and look at airline stocks. Actually, before we go into airline stock, let's look into VOO. So VOO, we're seeing a lot of support at this level and continuation of making higher highs. I think that, wow, this is actually very interesting. Let's look at a 1-year chart. Okay, and now let's look at a 3-year chart. Oh wow, so we're way up here. Okay. Some people would say that we're due for a correction, and for pretty significant correction. So we have about 20%, actually 18.5% to the next major line of support. Next we have about 6.5% correction to the previous higher highs, and this might act as a support, but we are going to go ahead and look at a 180-day chart. So let's see if we can draw a trend line. It's going to be a very close trend line that we can see on the screen with just a 180-day SMA line. Let's draw this one a little bit further. This looks pretty good. All right, so we're approaching this very, very important line where as long as it's trading below 180-day SMA line, this is going to act as a resistance. We have seen this happen before, so this acted as a resistance. You can see a lot of consolidation here, and you see how it ended up breaking through. We can see a confirmation of the support, confirmation of support through consolidation. Just a very big dip, lots of volatility on the market, and 180-day SMA line seemed to be confirmed as a support multiple times throughout this entire process of growth. What I would want to be very careful with is I would want to see it continue making higher highs and continue to recover, because as long as if it turns down and continues to go below this 180-day SMA line, and if it continues to go down below this trend line, which acts as a support, it might act as a resistance in the future, and it would be very difficult to break through it and continue making higher highs once we break below this trend line. We have our SI indicator and MACD indicator pointing down, so we got to be very, very careful with the fact that these kinds of stocks are very volatile. Just majority of the stocks are very volatile right now. So just be very, very careful with seeing how Monday is going to go. Let's go ahead and set up our alerts, and I actually want us to look at airline stocks after this, and then we can look at stocks like Tesla. And again, if you're just tuning in, if you have any ideas or suggestions or any of the companies that you're interested in, just leave a comment in the comments section, and we're going to go ahead and discuss those next. So we already have our alerts set up, and we're going to follow up on this one here soon on Monday. Nothing very interesting with BABA. T-Mobile is continuing to go down. All right, we make JNUG. All right, JNUG makes lower lows. British Petroleum. Okay, British Petroleum ended up falling from its highs, but again, it's hovering at around $24 a share. Still a very strong trend up. Continues to make higher highs. If we are going to stay at this trend line, it will have to continue to go up on Monday, but again, it doesn't have to. It's not on the overbought nor it's on the oversold side on the RSI indicator, and we also see the MACD indicators pointing down, so we're just going to be very careful with this one. But if we look at a 1-year chart, we can see that it used to trade at $32 a share, currently trading at $24, so still has about $10 to go. If we look at oil prices, they're currently at closer to $60 a barrel. I think $64 a barrel. And as long as the oil prices continue to go up, we have ExxonMobil and we have British Petroleum that will expected to be going up as the price of oil continues to go up. AKR, this one is definitely on the overbought side. We have set up our alerts, which were triggered, and gosh, what a perfect setup. We had such a big runoff on this one. Definitely on the overbought side right now, but as you can see, we only have one alert set up, which means that we ended up setting it up right around this level right here. After it took a dip, it confirmed this line as a trend line, as a support, and it ended up breaking through our resistance just like we called out, and had a 27% run up after its earnings. That is insane. So 29 cents per share. That is awesome. So AKR, that's a very good one that we looked into. Still though on the overbought side. IDT on the overbought side. We have DFEN. Okay, very interesting. So again, this is actually let's look at this one. All right, this one is a low cap stock, very, very low cap stock. But look at the max chart, we can see that it ended up taking all the way from 69, so almost $70, all the way down to $11 a share. Continue to make higher highs, had dips and valleys, right? Peaks and valleys. Currently trading. Okay, so yield, so 0.48% annual dividends, and we have $16 a share right now. So I'm definitely on the gosh, this just tanked by 5%. That's very, very significant, by 5%. But again, this is a small cap stock. Yeah, continue to make lower lows. And we'll see if it found its support right there. If we look at a 1-year chart, we've already identified its resistance and the support levels. We have about 33%, so 33% on the negative side, almost 34%. We have the line of support which continues to point up. Yes, the 180-day SMA line is pointing up right now. So 17.48% down to that price level. Very, very cool. All right, so what are we gonna do? Let's go ahead and set up our alert right around here. All right, so you have our alert set up just to see if it's going to continue making higher highs or if it's going to continue making lower lows. So we have both of the alerts set up, and very interesting stock. I do like the fact that it hasn't. It's approaching this line of resistance, the previous peak that it had at $21 a share. That would be the next resistance. I would expect to have a resistance there, but again, still way on the oversold side in comparison to where it used to trade. And the company, went public in 2017, continued to go up all the way to 2018, took a big dip, and was able to recover just like majority of stocks out there, S&P 500. Interesting. All right, so daily aerospace and defense, both 3x shares. Okay, so this is not specifically a stock, but okay. All right. I love the fact that we already looked into the yield curve that continues to go up. Yeah, we definitely got to be very, very careful with the yield curve. Wow, that's got to be very, very, very careful with the yield curve. It usually signifies a very, very strong resistance, a very, very strong signal for a recession. And if you can see it on your screen right now, even though it's continuing to go up, the recession doesn't start as soon as it starts to go up, right? Right here we can see that as soon as it started to point up, the recession had started, right? So the recession has been just highlighted basically on this graph. And again, it's slightly greenish because it's still continuing to go up, and we're still in a recession. Arguably, we were able to recover, but not all aspects of the economy were able to recover. And we see that in 2007 we're basically at the same level, and this is when the worst started to happen, right? So in 2008 and beginning of 2009, that's when the unemployment rate ended up skyrocketing, and when the stock market ended up going down significantly. And ever since it peaked in 2009, 2010, the stock market was able to start actually recovering. But as of now, yeah, we definitely have to be very, very careful with this. So let's go ahead and we talked about looking at airline stocks. We'll do that in a second. Let's look at X. Okay. All right. So there's a British Petroleum, I think, that we looked at. Yeah. So we drew this head and shoulders pattern, right? And we were expecting this to go down based on the previous patterns, but since the price of oil continued to go up, we ended up setting up our alerts just to make sure that we're not missing up the rally. And we didn't miss the rally. You don't see the positions right here just because this is my trading account, but on my Roth IRA account, I was just able to experience the run up on this, which is perfect because we already knew about this and we had the alerts set up on this account. So that's perfect. Actually, let's go ahead and set up our other alerts. And we're going to look at the steel right now, US steel. And if you're just tuning in, don't hesitate to leave a comment with the company that you want me to review, and we can look into that one in a few minutes. All right, so X, right? So USS, let's go ahead and look at the head and shoulders pattern, right? So this would be the next major support. And as you can tell, we already had some alerts set up right here, which it ended up blowing past that. What kind of expectation would we have here, right? So we had confirmed this line over resistance as a support once, twice, and potentially will confirm it as a support the third time right around this level right here. Actually, I don't want us to get confused with these graphs. We'll remove this one for now. There we go. And we can see that it's trading at it's trading at $16.65 a share. Let's go ahead and set up our alerts at or above, and let's go ahead and do another one slightly above the resistance level. At or above, that's perfect. And if we are going to go ahead and zoom in on a 3-year chart, we can see that it's continuing to go up. Even though it faced a lot of resistance on a 180-day SMA line on a 3-year chart, but even though we can see a perfect, I call it a golden cross, it's a 20-day SMA line crosses the 180-day SMA line, and we just experienced that. That's usually a very, very bullish pattern. And as long as this price level is confirmed as a support, we should see more of an upward momentum. I would like to see a 180-day SMA line pointing up, but it's going to take some time for it to flatten out and continue to go up if the price of let's look at this one real quick. Steel, yeah, United States Steel. So as long as the steel continues to go up, they only pay 20.24% in dividends. Yeah, so this is not the best company to invest into. Again, long term, not a lot of it doesn't pay a lot of dividends. And again, this is just my personal view. I would like to see a little bit more higher highs before buying into something like this. And again, the way I would treat this is I would swing trade it for a midterm. So I would trade it as a 6-week to 9-month trade, and I would want to see continuation of higher highs. I would not want to see that much volatility that the company experienced over the past, well, it's actually 5 years. Yeah, 5 years. So lots of volatility, but again, it starts to make lower lows. Not very interested in that. All right, let's go ahead and see what else we want to talk about. KMI starting to make higher highs. Okay, we had our alerts set up, which ended up blowing past the expectation, which is perfect. And let's go ahead and set this one up as well. KMI, Kinder Morgan. KMI. We just talked about this one? I feel like we just talked about this one. I already forgot. So KMI back in 2015 dropped to $14.92 a share, currently trading at $14.70 a share. This price level was confirmed as a support multiple times in 2018 twice and back in 2016. So now we would expect it to be a resistance, but the company pays 7.14% of dividends every year, which is very good. And this is, yeah, so this is again a real estate investment trust fund. All right, let's see what else. Let's go to FinWiz. And actually, before we go to FinWiz to scan for our stocks, let's actually go ahead and look at some airline companies. Let's look at, which one should we look at? American Airlines. All right. We have American Airlines that continuing to go up, okay? So it's slowly but surely recovering. It's okay, so I don't really like the chart that I'm about to show you. Oh gosh, no. All right, American Airlines. Yeah, so we've already identified that this is approaching a very strong resistance. That was confirmed as a resistance multiple times throughout the last 3 years, what I would want to see is I would want it to break through the resistance and confirm it as a support, preferably start trading above 180-day SMA line, currently on the overbought side on both MACD and RSI indicator. Not very interested in buying it at the best at this price right now. What I usually tend to ask myself is whether this is the best deal that I can get. And for me right now, this is probably the most dangerous spot to buy into it. And that doesn't necessarily mean that the stock of the company is not going to go up and not continue making higher highs, but it's just the idea behind the technical analysis is that patterns tend to repeat themselves. Again, they don't necessarily have to, but this, from the technical analysis standpoint, is way overbought, and I would want to stay away from something that is approaching a multiple year line of resistance. So for those reasons, I am not going to entertain this one, but we will look at some other airline companies. All right, so Delta is recovering very well. So I believe Warren Buffett ended up selling nearly at the very bottom. I think $28 a share. I would have to confirm that, but again, it's currently trading at $47.94. It's still reporting negative earnings. Let's get a different chart. So it's approaching this very strong resistance, and it seems like it's starting to point down, which means that it can mean two things. It's either confirming that as a support or confirming it as a resistance. I would want to wait and see how this one plays out. I believe I already have a position in a different account on this one. Is it on the overbought side? Yes. Is it on the oversold side? Definitely not. I would want to see it making higher highs and confirm that 180-day SMA line, or just this price level at about $47, $48 a share as a support before buying into it. And let's go ahead and set up those alerts. At or below, create, and again, at or above. Perfect. Create. All right, awesome. And we've already looked into this one. So Delta, let's look at UAL. Okay, so United Airlines is also on the overbought side, just from technical analysis standpoint, but again, in comparison to where the company is trading at right now, so $52 a share. We used to trade at $52 a share back in 2015, and back in 2014, and even 2016, we ended up passing that. So before the Rona situation, used to trade at $90 a share, so about 40 more dollars of potential profit, which is about 80% of growth up until the next major line of resistance to the previous highs. We still have a lot more other levels of resistance, so this was confirmed as a resistance twice and confirmed as a support once, and this line of resistance is at 58.47. Let's go ahead and look at UAL. All right. What did we say? 46. This line was at $60.31, 58.48, 58.48. So about right here. So this would be our line of resistance. Actually, we're going to go ahead and before removing that, we're going to set up our alerts at or above, and we're going to see if it continues to make higher highs at or above and at or below. There we go, awesome. And remove this one. Company had reported negative $7 on the share of earnings, and we have next earnings report coming out in actually 2 months. So it's actually 2 months right now, so that's good. All right, let's see what else we want to talk about. And again, if you have any ideas for any of the other companies that you want me to review, don't hesitate to share those. CCL recovering very quickly. CCL. All right, so blew past our expectation of meeting the resistance here at around $24. Currently trading at $26.81 right now. We have another alert set up closer to this multiple Is it multiple month or multiple year resistance line? Definitely on the overbought side. I would want to see this being confirmed as a resistance, as a support, I should say, before adding on to the position. And again, from personal point of view, this continues to make higher highs. I would not be surprised if the company goes down to $23 a share and confirms this level as a support. But even if this happens, I would not want to sell. I would want to confirm that as a support and just continue holding on to it. It's a growth stock for me. There's nothing that I'm in a rush for, and I'm expecting a lot of people who are very interested in taking cruises and getting outside and utilizing all of these things that they were prohibited to do over the past year, actually a year and a half almost. So we're just going to be very, very careful with this. And let's look at another aspect of this technical analysis, right? So the company used to trade at this, actually the previous, right? So previous support at $15 a share back in 1996, confirmed this about the same level of support back in 2000, back in 2003, back in 2009. So it has its peaks, right? It has its valleys, but ultimately it continues to make higher highs. There's a lot of volatility going on. There's a lot of sell-offs and a lot of buybacks of this share of the company. Extremely manipulative, especially at this point. But it seems to be trading above the previous lows, right? So we have $24. So it seems to be breaking above this multiple year support level, which could have acted as a resistance, which it actually did, right? So we saw it act as a resistance right here, but the price that it's trading at right now is above those multiple year resistance lines, which makes me think that CCL has a lot more room for improvement. And we had peaks at $44, almost $45. We had its peak at $57, and we had another peak at $60, $66. So a lot more room for growth, and it's getting warmer outside. So again, I'm expecting a lot more people to take advantage of this. So definitely a very interesting stock to continue to look into, and I'm not in a rush to sell. So that's just my point of view. So CCL, a good one from my standpoint. Again, if you have any ideas for any of the stocks you want me to review, don't hesitate to share those, and we're going to do so soon. All right, UAL, we already looked into this one. LUV, way on the overbought side, had a very, very good in comparison to some other airline companies' balance sheet. That's why it ended up recovering so quickly. Not very interested in something like this. Again, it recovered very quickly too. JetBlue, good for them. Awesome, fantastic. We're still looking for something that is undervalued and is performing right now, but still has a lot more room for growth. Again, I tend to ask myself whether it's the best time for me to buy a specific stock and whether there's a lot more room for improvement. And if the answer is yes to both of those, whether it's the right time to buy and whether there's a lot more room for improvement, then I tend to take a position. And again, the potential determines the size of the position that I'm taking. All right, let's see. All of these are way overbought already, and we're able to recover a lot of it. Save, yeah, again, approaching a multiple year resistance line. I would not want to be surprised by the fact that it gets rejected at this level and continues to go down before it starts making higher highs. So I would not be willing to take the unnecessary risk on something that is on the overbought side. Let's go ahead and look at something else. What else should we look into? I believe we had some other companies that we had on our list, and BXP. Did we look into this one? BXP. BXP starts to make higher highs. Okay, I really like this one. Let's review this one. BXP. BXP. I believe that one pays dividends. BXP. Boston Power. Okay, yeah. So real estate investment trust fund, almost 4% in dividends. It's a medium cap stock, right? So $15.43 billion valuation. We have a 5-year chart. Okay, pretty good. So the company used to trade at about 120, 125, $130 a share. and currently trading at $99 a share. So about 20-30%, actually about 30% potential for growth. We used to trade at the same level at which we're trading at right now back in 2011 and back in 2008 before the global financial market crash. And dropped by 3.5% on a Friday. Okay, I mean, it started to be on the overbought side in this level, and then met its resistance, which, I mean, to be expected. That's not bad. Let's look at a 1-year chart again. From 132 all the way down to $74, almost $75 a share, $72 a share. Wow. 99. Okay, so the only hesitation that I'm having right now with this company is that it's approaching this very, very strong resistance that was confirmed as a support, right? So we had confirmed this above this level of price target for this company as a support back in December of 2018, I believe. Yeah, December of 2018, and now it's approaching the same exact level, which tends to act as a resistance. And it acted as a resistance before that over the past couple of days, right? So it got rejected at $106 a share. So this was confirmed as a multiple, I guess, peak resistance line. So what I would want to do is I would want to continue making higher highs before buying into this position. In order for me to monitor this, I will go ahead and set up my alert at the resistance level and at or above. And I will see whether it's going to continue making lower lows. Stock at or below, create. There we go. It's looking pretty good. It continues again making higher highs. That's a good setup for the company's stock. Very interesting. So the expectations are low. I feel like we looked into a lot of these already. 5-year chart. Oh my gosh, what is this? No, not very interested actually. 5-year chart, $7 a share, 4.7. No. All right. If you have any ideas again for any of the companies that you want me to break down, don't hesitate to share those in the comment section, and we can break those down. Let's go ahead and monitor the ones that we're interested in. From 20 to 36. Oh, what is this one? QH? QH, what is that? So what I want us to do is just to look at some of the companies that are on the market right now. I believe Airbnb, and this one is not very interesting. It ended up just so much volatility, just all the way down from $23 all the way down to $6, almost $7 a share. Seems to be confirming this line as a resistance, or as a support, I should say. But it's nothing, I don't have enough history to base my decision off of. So the company probably just recently ended up going public in July 2020. All right. Let's see what else we have. HBT. Let's look at HBT. Nope, not HBT. No. You know, sometimes I stumble upon some of these stocks. Excuse me. Some of these stocks that I accidentally type in the ticker symbol off and miss it by one letter, and then it happens to be like one of the best deals ever. And it's just such a stroke of serendipity. HVT, QH. I looked into this one. WTT. Looks like WTT. This looks pretty cool. I love FinWiz. It shows, it gives you a lot of different ideas. I love doing the breakdowns every Sunday on this. All right, this looks like a multiple year line of resistance, line of support. Let's go ahead and draw this trend line a little bit better. Very good, very interesting pattern. It's approaching this, again, very, very strong line of support we have, this is a 1-year chart actually, so this is multiple month support. Okay, that makes sense. So the company was on the overbought side and it saw a lot of volatility, so extremely highly manipulative. I'm not very thrilled with the idea of buying into the stocks that are all of a sudden having such a high volatility in comparison to what they were experiencing before that. So I, as much as it seems to be following this pattern, it might be better off for swing traders to take advantage of this, like a short-term swing trading um, strategy. I'm not very interested in this. This is, even though it's again having this golden cross of a 180-day SMA line being crossed by the 20-day SMA line, not very interested in this. It feels like I'm convincing myself into buying into this one, but I will not continue entertaining that idea. We'll look into some other ones. Finwiz gives you a lot of different ideas for some of the companies that you've never heard about. I've found so many companies here that I've never heard about. And usually I just hover around the first page and then we can go into the filter and then just filter it by a cap and figure out how much those stocks were earlier. Gosh, I'm so excited. This Monday is going to be awesome, and this week is going to be so awesome. There's going to be so much volatility. There's going to be so much going on in the markets. Gosh. All right. FUSN or IGS. All right. This one seems to be making higher highs. Actually, no volume. No volume at all. All right. No volume in any of these. ULH. This one looks pretty good. Oh, Lululemon. I haven't checked out Lululemon in a while. All right, so pretty interesting. Let's look at a 3-year chart. Oh, this is a 3-year chart already. All right. So, I mean, yes, we see this line of resistance right here. It's being confirmed as a support. Let's see where the next major line of resistance is going to be. Probably around this level right here. So 16% upward potential. And we only see about 5% until the next support line. So this might actually be a very good deal. We just had earnings report, so about 60 cents on the dollar that they reported of earnings. The next one is coming out in about 2 months. On Friday, the stock ended up going down by 2%, and I like that the RSI indicator is not on the overbought side yet. We have MACD indicator is pointing up with both of its arms. This is a pretty good setup for the company. I'm not trying to convince myself. I'm trying to figure out and see if this would make sense to buy it at this level. So whenever you're charting on your graph, you would want to figure out the lowest points, right? And see if there is any sort of trend of people buying and selling. And those are sometimes pretty difficult to see. So we can see these higher highs, and breaking through this resistance was devastating because after it confirmed it as a resistance, the stock ended up going down by 37%, was able to recover 104% of that, which is fantastic. But again, is this the best time to buy this? In comparison to its previous prices, it didn't spend that much time trading above this level, right? Above $24 a share. So this is more likely, this entire area is more likely to be confirmed as a resistance a lot more times than it would be as a support. So I'm not, let's look into Yahoo Finance and see what Yahoo Finance is going to show us. ULH. So it's a small cap stock, continues making higher highs. Yeah, and it's approaching this line of resistance, multiple year line of resistance, 2008, 2014, 2019, way on the overbought side. Yeah, got to be very, very careful when you're buying into something, even long-term investing. If you're buying into something that is hovering around the previous maximum price that you used to trade at for a while, just gotta be mindful that, hey, if it goes down, it better pay decent dividends for me to justify a long-term hold of the position. All right, let's go ahead and look into something different. And again, if you have any ideas for any of the stocks, go ahead and share that in the comment section. And if you want to join our Discord group, the link is in the description below. We're going to go ahead and post some of the stocks that we were able to find and the ones that we were following up on during this stream, after the stream today. Crude oil, and earlier I remember in this conversation we ended up talking about how the crude oil was above $60 a share, and I believe I said 64, but I think it went down just a little bit, so it's at $62.61 a share. It seems like everything seems to be green, so I'm expecting Monday to also be green on a lot of positions. So very cool, very cool. So Coke is going to be reporting their earnings. Oh, this is pretty cool. I don't think I've ever utilized this. That's awesome. All right, it's Neo. Oh, very cool. Let's look into the Neo. Oh, okay. All right, yeah, so, I mean, why am I surprised? Yes, Neo had a very big run up over the past couple of months. You gotta ask yourself whether this is the best time to buy. Let's look. We're seeing a multiple month support level right here, just like with Tesla, right? So we are seeing a lot of the support at around the price at which it's trading at right now, right? 600 and we will put that as resistance line at 666. Wow. All right. We have earnings reported, which was positive. 5 months. Okay, split. Yeah. $670 a share for Tesla. NIO is in a very similar pattern situation. I like the fact that it's making double bottom and it seems like it's making the second lower, so higher low, but I would want to trade above 20-day SMA line. I do not like that this is inverting, so 180-day line, SMA line is inverting right now. It seems to be confirmed as a support multiple times. Therefore, we would expect it to be confirmed as a resistance in the future. We have a lot more room for growth, so about 17%, but we also have about, let's see, to the next major support at about this level right here, about 32% just air. I would be very hesitant on buying something without it starting to trade above the 20-day SMA line at least, and take it from there. But as of now, I would want to stay away from something that is trading so it's not at the very certain level. It's approaching a multiple day, multiple month support level, but I would want to see a higher highs. In this case, we're just going to follow up on that one. Actually, I'm actually really curious. I know that I look at Tesla all the time, nearly every single day, but I don't get notifications because I don't set them up. At or below, create, and let's go ahead and make another one. At or above, there we go. Awesome. Let's see. Let's look at some other ones that we talked about. So Coke, we were looking at Coke. Let's look at that one. Wow, so volatile, so volatile. I don't know what this company does. It seems to be at a multiple month support level. Oh, it's trading at right now. Okay, so it's trading at 263. Wait, what is this? 9-10%. Let's look at a 3-year chart. All right, so it makes higher highs. The next level of resistance is going to be at around $285 a share, which is about $20 more than the current price. Way too volatile. Way too volatile. If you're a long-term investor, this is extreme. This extreme volatility is not something that at least I personally look into in my stock. I do like this multiple year trend line being confirmed as a support, right? So it was confirmed as a resistance multiple times, and then it was confirmed as a support, which we ended up breaking through and currently trading above that. But I believe that there are other companies that are better valued than this one, at a better value right now, with the potential for growth, with double or triple digits. Okay, so this is Coca-Cola. What am I even surprised about? So Coke. All right, so interesting. Okay. Gosh, I can't believe that. Let's look into something real quick. Actually, let's look into Yahoo Finance. All right, maximum chart. Okay, so used to trade at about $67 a share. Gosh, 256. That is insane growth. Consolidated. Okay, so Coca-Cola Consolidated. That's different. Yeah, so this is not a. I believe it's K, right? No, KO. There we go. The Coca-Cola. All right. Let's look into this chart. Yeah, definitely on the overbought side. Very good company. 3.43% dividends. Long-term investing. This is one of the best companies to invest into ever since 1985. And even though the company existed earlier, we can see this on. It's funny picture of Warren Buffett. But we can see that the company starts to make higher highs, and again, pays 3.43% in dividends. Continues making higher highs throughout the years. Definitely called a recession-proof stock. So very interesting, very, very interesting. Johnson & Johnson ended up tanking on Friday, right before market close. Let's go ahead and look at a 5-year chart, definitely on the overbought side. I believe the vaccine was approved, FDA approved by Johnson & Johnson. I have to reread the news, so don't quote me on that, but $150 a share, definitely on the overbought side. Lots of other companies that I would much rather invest into that are showing a lot more room for growth. This, as of now, is on the overbought side. Let's go ahead and look into maybe one more, and let's see if there are any other companies that we want to review. We already talked about T-Mobile, and if you have any ideas for any other companies that you want me to review, don't hesitate to share those in the comment section, and I'll be happy to review those. All right, Coca-Cola, ExxonMobil. Let's look at ExxonMobil. So on a 5-year chart, it's approaching this very strong trend line that might act as a resistance. So $230 billion valuation of the company, pays 6.40% in dividends, XOM ticker symbol. And let's look at where this trend line is at. It's right around here. So wow, yeah, so it's approaching this multiple year line of resistance. We got to be very careful with trading this one. As long as it breaks above this trend line and confirms it as a support, I would be happy to add on to my position, but as of now, I'm only holding 25 shares of ExxonMobil. We're up $191, and the average price was $46.71 a share, which was about right here. I believe I ended up holding on through this valley that we experienced. So very, very interesting. Let's look at Verizon. Gosh, and I know we're jumping over so many different stocks, but again, if you have any ideas that you want me to review, don't hesitate to share those. AT&T. So AT&T is something that I'm showing a lot of personal interest in, and I feel like I'm convincing myself into this one. But let's look at the technical analysis of T-Mobile or AT&T. So we just experienced this dip, right? We have alerts set up on the previous lows right around $27.57. Yeah, it continues to make lower lows. I haven't read the news for AT&T, but I wonder what acted as a catalyst. I know that the entire market, for the most part, ended up going down on Thursday and Friday last week. But again, right now we see a very strong dip, right? So about 2%. 2% for T-Mobile is AT&T, I should say, is pretty significant. We've already identified lines of support. Let's go ahead and identify a few more. So we can see a line of support right here, and earnings report is not coming out until a month and a half from now. The way I want to trade this company is I would want to see higher highs, and I would want to see it trade above 180-day SMA line. I do not like the fact that the company shares right now, both the 20-day, the 180-day SMA lines are pointing down. We have MACD indicators that is pointing down. The only good thing, I guess I should say, is that the RSI indicator seems to be on the oversold side, which usually shows some support at that level. Doesn't have to do it again. If it's done it before, that doesn't necessarily mean that it's going to happen again. So yeah, AT&T, just got to be very careful with that, trading this one. Very long-term investment with 7% in dividends. The price used to be at $27 a share ever since like 1996, then back in 2006, and then again 2010. Ever since 2017, 2016 actually, June of 2016, companies started making lower lows with its peaks and valleys trading at the same exact level that it was a decade, 2 decades, and even 3 decades ago. As much as I like AT&T, their balance sheet is also not the best right now. They provide decent customer service, at least from my personal experience, and I haven't really experienced any major problems with their coverage. They're also working on 5G connection. The only thing that I see that is happening on YouTube, especially, or just on TV, anywhere on the news, everybody talks about T-Mobile, but nobody talks about AT&T, because AT&T doesn't spend as much money as T-Mobile does on advertisements. And I believe that T-Mobile ended up spending about almost $2 billion in 2019 on advertising, on advertisements, while AT&T barely spent, just nowhere near they spent on the advertisement, which it's what they're focused on right now. I do know they have a lot of debt, but again, we have companies like Tesla that prove us that the only thing that you need to do on the long term is to have a good business model instead of a good balance sheet, basically, because the money will come eventually, as long as potential buyers of the shares of the company can see the value that the company offers. So with AT&T, a long-term investment stock, 7.27% in dividends, existed even earlier than Yahoo Finance shows us, and a very much a personal favorite of mine. So this is just something that I look forward to when I'm investing into companies like that. So McDonald's is on the overbought side. We have Walmart that I also believe that is on the overbought side. We experienced just a little bit of a recovery. Home Depot is continuing to push up. Wow, this Home Depot is just doing so well. Ever since 2010, just experienced such a tremendous growth. Almost, what is this, 7x? Yeah, 7x on the prices of the shares through over a decade. That's insane. All right. I bet Lowe's is experiencing the same. Yes, they do. Costco probably does the same exact thing. Yeah, Costco's on the overbought side. Wow, very cool. Let's look at Visa. Visa is also on the overbought side. Visa pays 0.6% in dividends. P/E ratio is above. P/E ratio is just so high up at $43, or at 43.85. The entire market is on the overbought side. P/E ratio, just for a majority of the companies, are way on the overbought side. You got to be very careful with these valuations of companies. That's exactly why we do these kinds of streams. That's exactly why we want to find the most beneficial positions for ourselves and find those stocks that have been performing well and just recently started their path on the recovery to previous levels. that had proven to be able to pay dividends for a while and has shown to be hovering at around the same level for a while as well. So again, if you're watching this and this is just a repeat of the stream that you haven't gotten a chance to see during the actual live stream, don't hesitate to leave a comment and join the Discord chat and leave a ticker symbol of the company that you're interested in, and we can break those down. Again, I'm super pumped to continue doing these, and if you guys like these videos, let me know, because I am really curious. Last time we did this, we got a lot of traction on the feedback that I received, and a lot of tractions on the companies that we've looked at. So hopefully, again, you guys were able to find some value in this, and if you did, don't hesitate to smash the like button below. We'll continue making these every Sunday, and if you like them enough, we'll continue making them a little bit more often. Hopefully you guys were able to find value. I hope you have a great week, and take care.